In business, joining me now is A. Vellayan, Executive Chairman of Murugappa Group from Chennai. Mr. Vellayan, many thanks for joining in. I'll start with the economy outlook. In fact, in the past 3 months, we have seen the government moving on a series of reform measures. If the Parliament endorses some, if not all, do you see tangible results taking place in the economy?
You know, I would be cautiously optimistic on this because till now there has been a lot of talk and Parliament session is just starting. We have 3 or 4 issues, one on insurance, one on pension, the other is FDI in retail. But I think the more critical issue is how the Parliament functions in itself. Is it going to get into constructive debate? And I'm hopeful, since the Prime Minister has called the BJP for discussions and if people are taking this reformist attitude forward, yes, it will be positive. But if there's going to be, rallying with the view of the next elections in mind, then they will take different stands. So we'll only know at the end of the winter session.
Mr. Vellayan, the other area of concern has been on capex spending. If you look at the economy as a whole, corporate investments is pretty much grounded to a halt. You're not seeing fresh capex on fresh projects at all. What do you think needs to be done to revive that investment cycle once again?
See, 3 or 4 things. Number one, I think uninterrupted power, even at a higher cost, needs to be assured, because otherwise, it will be a stop-start situation. Secondly, the linkages of raw material relating to iron ore and coal need to be made uninterrupted again. Otherwise, it's a very uneasy situation. Third, I think there is a basic issue of demand itself, both in export demand as well as domestic demand. We have seen some demand destruction across the world and in some parts in India as well. And here it's a challenge because this will take some time to revive. So I think what can be done is, if the 3 areas I referred to are set right.
Sure.
And finally, if they have a more realistic environment policy,
sure,
then you'll start seeing some investment coming in.
I want to talk about the fertilizer sector, Mr. Vellayan. Do you see urea prices being deregulated? The government seems to be of the view that deregulation can happen only after all producers become gas-based. Is there merit in this argument? Do you see this happening?
That will never happen, because Indian gas price will level off at anything north of $10, at which price urea is not worth producing. The second thing is, on the investment side, there is a point at which urea cannot be produced cost efficiently at gas prices anything more than $6. And if you're talking about the new gas prices north of 10, it might be cheaper for India to make urea outside and bring it in. But I think if we adjust the price of urea by reducing the subsidy, the consumption itself will come down, and therefore the need for increasing substantial capacity needs to be questioned.
The other area that I want to talk about, Ms. Vellayan, was the sugar sector, where Murugappa Group has fairly advanced exposure. The Rangarajan Committee has recommended complete decontrol of the sugar sector, except for perhaps fixing cane prices and revenue sharing with farmers. The report pretty much says near total deregulation. Do you see the government buying this? What could be the possible hurdles, and how will sugar companies benefit if it happens?
I'm a little more optimistic here because, this time around, they've done the first move in terms of the packaging in reducing the content of jute required to be used for packing. The second is on levy, and I'm hopeful that by January, I think they've sent it around to the states for comment, and the states will have to subsidize it in a different form, so that will also happen. I think the export has already happened, the free export. So these 3 things happen. The only thing left is the demarcation of land, and that is a state government issue.
Sure.
So I think with the first 3 happening itself, it will be a very positive sign for the sugar industry.
On the area of the financial services, Mr. Vellayan, where again, Murugappa has a fairly well-entrenched financial services business that spans anywhere from commercial to consumer finance. We're talking at a time when both the government, the Reserve Bank of India is talking about evaluating banking licenses, fixing guidelines for it. Do you aspire to be a bank?
See, we will have to wait for the detailed guidelines to come out, and the choice in front of us is either to be a large and successful NBFC, which is playing in a niche market, or to be an also-ran small bank. and needing all the skills of, forex, treasury, and having to conform with all the priority sector requirements. So it's really a toss-up. The board has not yet decided. I think when the final guidelines come,
Sure.
we'll have to stack up the pros and cons of both these alternative models and then see.
A word about Tube Investments, Mr. Vellayan. Your acquisition of Shanti Gears early in September this year. Could you explain to us how does that fit into Tube Investment scheme of things, and what is its logical aspirations, and how this business comes into your own fold?
Okay, TI is also in the chain business, and in the chain business, we're in the transmission business. And world over, if you see the big boys who are Subaki, Rexnord, Renault, they are in chains and gears and gearboxes. So there is a synergy in terms of the product, transmission and distribution, not only in India but across the world. Secondly, Shanti Gears takes us into a different level of technology. And I think, it is higher than the current level of technology we have in our TI units. So I see a clear fit between Diamond Chain and Shanti Gears and the combined aspect of power transmission going forward. Further, I think there is an opportunity for Shanti Gears in terms of its current level of capacity utilization.
Sure.
And the capacity in terms of technical competence it has to play in the offset markets where, they have actually accreditation to make even aircraft landing gears. They can make very high-end stuff. It's a question of marketing it properly.
Sure.
So we are hopeful that this high-tech asset can be leveraged by us.
Sure. One final question, Mr. Vellayan. I'm talking about interest rates. Corporate India has been clamoring for lower interest rates. By when do you see interest rates really cooling off? And relatedly, are you also, like many corporates are, swapping your rupee debt with foreign currency debt?
You see, two issues. One is I don't see interest rates going further south by more than 0.25% or 0.5%. I think it is a toss-up, where the finance ministry wants it, the RBI is more cautious, there is this inflationary trend, and therefore they will be more cautious. As far as the group is concerned, fortunately our leverage is fairly low. And wherever we are involved in imports, we have gone on a fully hedged import credit. And that has taken us through. That's a large part of our exposure. In other areas, we have largely done with local borrowings, and except for CapEx, where we've gone for ECBs. Normally, we are either operating on a fully hedged basis, and most of our debt equities are, below 0.4 or 0.5 to 1.
Okay.
So we've managed with that.
All right, Mr. Vellayan, we'll have to leave it there. Many thanks for joining us today on Bloomberg. Vellayan, Executive Chairman of the Murugappa Group from Chennai in Business Today. Up next, some minutes.